All right, so it gets more and more interesting, ladies and gentlemen. We're going to have a very, very special interview which is lined up. So firstly, can I invite on stage the real interviewer, calling on the MD and CEO of Anarock Capital, Mr. Shobhit Agarwal, to please come on the dais. Can we have a huge round of applause, please? And yes, meanwhile, requesting all the stalwarts standing in the front aisle to kindly take your seats. Thank you. So yes, Mr. Shobhit is all geared up to break all records today. The charming gentleman he is. And yes, he's going to invite a special guest, a senior managing partner and regional head of Middle East and Southeast and South Asia, of course, from Brookfield Asset Management. Please put your hands together for Mr. Anuj Ranjan. All right, so we're expecting some serious rapid fire. But before we get started, may I request all the stalwarts standing in the front aisle to kindly take your seats. And so wonderful to see the meet and greet and people taking some lovely photographs. Yes, indeed, celebrating one of the most amazing days in the real estate industry, ladies and gentlemen, which is called as the Real Estate and Infrastructure Summit 2018. All right, so yes, over to the interviewer, Mr. Shobhit Agarwal. Thank you so much.
Thank you. It's indeed a pleasure to today interview Anuj Ranjan, Senior Managing Partner for Brookfield Asset Management and Regional Head of Middle East and South Asia. Also, thank you, NAREDCO, for giving us both this platform to talk to you. Anuj may not know but how big a fan we are of him as both personally and as a firm. He moved his office to Peninsula Business Park. We followed him there. He then moved his office to 1 BKC, and we actually moved behind him. So literally, we are trailing him. Now we opened our office in Dubai just to make sure we know what he's up to. Just by way of little bit of a sort of intro on Anuj. Anuj joined Brookfield in 2006 and held various positions within the company, including mergers, and did many mergers and acquisitions, private equity, real estate advisory. Lucky for India, he relocated from Toronto to India in 2009 and helped build Brookfield's business in India. Then in 2016, he moved to Dubai to expand Brookfield presence in Dubai region, the whole GCC region. He, of course, holds a Bachelor of Degree of Science from University of Alberta and MBA from Richard Ivey from Canada. Manoj, welcome and thank you.
Thank you,
we have amongst us a lot of developers, a few media people, and a lot of anxious people to know what Brookfield is doing. I told you anyways, I was a big fan and I've been tracking you. So let me try and ask about 20 questions, rapid fire. We have half an hour. Anything that you want to skip, you may. But, I'm going to try and catch you. Not loud. 4 years of wait for Brookfield to start their business in India with Unitech. And it was a mega deal. What were you thinking? 2006 to 2011.
2009 till 2012.
2012, yeah.
So
4 years.
First 4 years in India, we didn't do a single deal.
And you beat some of the big boys in that. I remember we were on the other side. So what were you thinking and what took so long, right?
I think we arrived in India at a unique time. 2005 to 2009, a lot of capital came in. And right when we came into India, everyone started exiting. Okay. And I think that's, we do like to say we're contrarian, but we didn't expect that amount of exit from the market. Many funds that were around back then, sort of shut shop and left. And we realized we needed to really learn the market, get our head around what was happening. And yeah, we took our time. I think we're pretty patient. And first 3 years, we really just focused on our construction business, focused on our advisory business, and spent some time just getting to understand India and the market. The Unitech opportunity was an opportunity that just happened to come at, we thought was a reasonable price. And it was complicated. And it required, I think, a group that was willing to take some operational risk. And you know, those are usually the areas that we as Brookfield sort of excel at. And I think we thought that it was we could see the signs that the market would change in around 2012. The new current government had not come in yet, but you could see that there were signs of momentum. And so we decided that was the right time to enter. Looking back, I think we're very happy that we made that decision. But at the time, a lot of sleepless nights.
A lot of sleepless nights. I remember we were on the other side, 8 million square feet, 5 different assets, 3 different cities, and you took the plunge. And we were really not sure at that point you'll cross the line, but good you did, and I'm happy we backed you on that one.
Thank you.
Getting Brookfields to India, how did you manage to get it all the way? Right. So you know, I'm sure it required convincing. 2009 was not the best time. Lehman had just happened. So it took a lot of guts to come to India at that point. So how did you manage to do it?
No, it was, you're right, it was interesting. And I think everyone's heard this saying, but in 2009, foreign managers were saying India stands for I'll never do it again. And that was a tough time to convince a foreign company to make investments in the country. But I think, look, as a group, we've been in Brazil. We've been in Colombia, we've been all across South America, we've invested in the Middle East, we're now in other parts of Asia. There was definitely a view that over the long term, we needed to be in India. And you know, whether we set up an office in 2009 or whether we set it up in 2006 or whether we set it up a couple of years ago, at some point we were going to do that. I think it was more about just somebody willing to put up their hand and saying, I'll take that initiative. And it was, you know, it was at that time that we thought that there could be an opportunity due to capital actually retreating. So we thought, you know, maybe this is the right time for us to set up shop. But otherwise, to be honest, the way we built the business was by slowly, I'd say, being patient and then slowly and incrementally doing transactions. So, you know, Unitech was one. There were others that followed. There was one with Mr. Hirnandani who's here tonight, obviously, and a large one, and slowly and surely we sort of built the business bigger and bigger, but it wasn't all at once. It's actually been a 10-year journey.
You know, we were doing some analysis on your portfolio, and we thought you guys show up just after a bad event. So 2009 happened and you guys showed up. Then GST, RERA, demonetization happened. We thought everybody's going to run away, and there you go and finish the deal with Hirandani, right? Who we thought would never sell. Right, so he's right here. We thought he's not going to sell, but you finish it just the time when everybody else was rethinking India. What is your take on it? I mean, how you guys looked at it, and I mean, do you guys think these were good steps? Like I said, you always jump in the river when it's turbulent, right? So how did you guys cross this?
So look, I think we first look at any country in the world on a macro level and just make sure that that is a market that we want to be in. You know, I always tell people, I think of India as actually 3 countries. You could take the first 100 million people, it's the exact same GDP per capita, spending habits as Mexico. You take the next 100 million people, it's exactly the same as the Philippines. The last billion people in India is the same as sub-Saharan Africa. So it's always been the opportunity of moving that third India into the second India into the first India. That means that, you know, over the next decade or 20 years, at some point that will happen. And I think a lot of it's happening now. And that is really the opportunity here. So long-term macro, once we get comfortable that we want to be in a market, then we're in that market through the good and the bad. You know, currency depreciations, whatever. Then we look at the micro situations as to when and how we should invest. So today we're doing a lot of infrastructure because there's a big you know, dislocation of capital and infrastructure due to some of the issues the state banks that used to fund infrastructure are having. But real estate at that time, you know, GST, RERA, demonetization, which are all long-term good, you know, they created some dislocations and opportunities for us.
I like the way you put it. It's a dislocation of capital and confidence, and that's the time you guys come in. which takes me, and you mentioned that you did real estate and then you moved to infra, road, solar, and then to telecom, towers, to distress assets. Where is the conviction coming from? And how do you cut across so many industries?
Sure. Look, we specialize in real assets, hard assets. While every asset's a little bit different, from an office building to an industrial building to a road to a pipeline, some of the concepts are the same. These are hard assets that have long lives. You can finance with long-term capital, and they spit out annuity cash flows. When we look at it that way, infrastructure has a huge scale and opportunity today, and it's a business we're big in around the world. We bought the roads from Gammon as our first real investment in the area. Again, there seemed to be not many people putting money into infrastructure at the time, but there seemed to be an opportunity due to some of the trouble that they were having on the banking side. And I think from there we've grown. We've bought more roads. We've looked at telecom towers, as you said. We've recently done a large deal with Reliance Industries on a gas pipeline. And that was our biggest deal in India to date. So I think infrastructure is really exciting for us. And in our world, cutting across the industries, there's probably more similarities than there are differences from real estate.
You know, NAREDCO, I think he actually completes your theme, real estate and infrastructure, right? Yeah. Somehow it's magical easier. I'm just about to give his age for people who don't know. 2 years ago, and there's a question for all of you, he got the under 40 ET award. 2 years back. How did that feel to be recognized in the under 40
Thanks.
best investors in the country?
No, I haven't thought about it in 2 years, actually. I turned 40 in 2 weeks, so it's probably apt. No, look, it was great to be recognized. I think what was exciting about that was, as someone who's Indian by background but was born and raised in Canada, to be able to have spent the last 10 years in India building a business, I think it was nice to be recognized by peers in India. So that was quite a pleasure, and I was quite honored.
A related question: How did you achieve so much in under 40? Yeah, I was still playing games, I think. So it's nice. What is your current take on India REITs and InvITs? You are holding one of the largest portfolios on office assets, multi-city, grade A. You bought and built. Is REIT really your end game, and InvITs is your really end game? What do you think about it?
So, I mean, we want REITs and InvITs to be successful. I think it's phenomenal for the sector if we can get long-term, patient capital that comes in at the right cost into the country. We are sort of waiting and watching. But I do think that today in India, the challenge a little bit around, at least some of the InvITs have had, is a perception as a debt product and a comparison to debt yields for fixed income, whereas REITs will have the advantage of being seen as potentially an equity product. It provides fixed income, but at the end of the day, you still have the potential for appreciation. So I think, I hope the first REIT's very successful, and we're all waiting and watching. And I think once the right investor base comes into InvITs, it moves a little bit away from the current more debt market investors. You'll probably also see a big pickup with infrastructure trusts over time.
I can't agree with you more than REITs have to be successful, and InvITs too. Coming back, I think this is a very personal question rather than, what are your 3 mantras that you follow personally for the investments that you make? What are the 3 big things you look at?
It's interesting you said 3. We have, I call them the 3 commandments. We have them written on our board at the office, and we have to remind ourselves every once in a while. I think number 1, we don't like to take greenfield development risk. It's not that you can't make money in greenfield. There's a lot of people in this room who can, but that's not the right place for our capital, and we'd rather partner with people after, on something after it's been built. So that's whether it's the pipeline, whether it's the roads, whether it's our office buildings. We've generally come in on a completed basis. That's a big rule that we follow. The second is we only like to invest in areas where we exercise some degree of control. So many of the assets we've bought have been 100% buyouts. Some things that we're looking at could be 50-50 joint ventures, but we rarely do a minority passive stake. And I think that's important as an investor to not, it's very difficult to be passive in this country. The third thing is, I think we like to look at a pan-India portfolio. I think what we've found is, if each state in India can operate so differently, that there's quite a bit of risk of only having single asset kind of exposure. So for example, if you owned real estate in Hyderabad, for 10 years, there was almost no appreciation, whereas the rest of the country was appreciating quite a bit. If you owned wind farms in Maharashtra, for a couple of years, the wind PPAs were not paid. So you would have taken a lot of undue risk. By having a balanced portfolio across the country, you can actually manage it a lot more. So we've had some huge wins like in Gurgaon, and then we've had Calcutta where it's been kind of flat, and it's now picking up. But by spreading it across the country, that's been quite good. You must deal with a lot of investors. How have you got any other mantras for us?
I thought you're not allowed to ask me questions. This is your fireside chat. But just to quickly answer that, I think investors in India are sort of, you are placed uniquely where you take control of the situation. But most people are investing with their partners. So the first thing that comes up, because they're taking minority stakes or just about 50-50, they always talk about partnership risk, right? So they all start by saying partner, partner, partner. But in your case, slightly different because you're buying 100%. So just to sum up what he said no greenfields, controlling positions, preferably 100%, but otherwise in control. And then something that's just multi-city, more countrywide rather than very asset-heavy or geography-heavy. So really,
Absolutely.
really very different from the rest of the gang. So I now think that birds of same feather don't fly together, but but maybe you'll prove us wrong. If you could change certain things in Indian legislation for making it more investor-friendly, what will be your top 2 picks?
It's a good question. I think a lot has been changed already, which has been quite good. I think and I'll bucket this into a broad category. The 2 things I think is, one is when any foreign investor brings their capital into the country, whether it be tax planning, whether it be what instrument you bring it in as, whether it be the FPI limit around debt, there is a lot of hurdles to cross. And that takes up a lot of time and kind of a disproportionate share of time than when we invest in other countries. So it would probably help us focus on our day jobs more of looking for opportunities if we had to spend less time tax planning and structure planning. So I think to the extent that could be simplified and you could have one set of rules that sort of governs it and is consistent, that would be very, very useful. That's just a general across the board. And the other would eventually having a better access to debt markets offshore, because the amount of capital required in the debt markets is pretty huge if India is really going to meet its real estate and infrastructure ambitions.
You have a lot of outside-inside view, in my view. I mean, you've been selling India like nobody else. I'm sure people are talking about elections. What's your view on the Black Swan event? I mean, what happens if elections don't go well next year? Does that keep you awake? Does it bother you too much?
I think our view now, having been here for a while, so let me step back. Had we only been in India for 2 years, it would probably terrify me. But we've been in India now through different governments. We've been here for some time. We've been in a lot of emerging markets. We've been in Brazil 120 years. I think we are of the belief now that India grows, sort of irrespective of government. This place is going to grow. Now, obviously, we would like, consistency, because to the extent that there is a continuation or a continuity, makes it easier to do business. I don't, less disruption, the better. But otherwise, we don't believe that a Black Swan event, as you said, would necessarily change our conviction of continuing to invest in the country.
So you're saying it could be a little disruptive, but country will continue to grow. All the right economic
Absolutely.
indicators. It may slow it down a little bit, but it'll still be a good map.
Yes.
I'm going to just, since there are a lot of developers here, and you have you've done a lot yourself. What's your advice that you'd give to the developers for making this country or making investing in their projects a little bit more investor friendly? What are your top two, three pieces of advice that you give them?
I think we've always found it a real pleasure to deal with groups that already that have a very good sort of corporate governance systems in place. I think that helps a lot to when you buy into a business because it's providing you that comfort that things have already been run the right way. And I think that's important because as a foreign investor, you're not just coming into a business today, you're inheriting anything that the business may have done in the past. And so knowing that I think sometimes people overlook the importance of corporate governance until after they have an investor, but it's important to have that up front.
Before, yeah. So
Yeah.
you're saying good control on finance.
Exactly. And I think that, look, I think it's important to always recognize that we all have different things that we're good at. And, industrialists and developers or any business are good at building out their companies. It's important I find that the groups that have somebody in the business that has a very strong financial acumen and a financial background helps with transactions on the other side when there's someone that's financially savvy to deal with. So those that actually hire an investment bank or an advisor to help them in that regard. So, I see Mr. Hirnanani there. We had a great experience dealing with him in his business for that exact reason. There was a lot of professionals involved, and we were able to get things done very smoothly.
So you're saying it just helps them to internalize and think differently. And I can't disagree with you. Sometimes we find it very difficult to communicate with the promoters. They're so headstrong. But anyways, it takes me to a little broader question. Do you think the fence sitters are now going to enter the country, given where we are? Interest rates are hardening. Country is going to go into elections very soon. What's going to be the impact?
So yeah, it's interesting because things are evolving as we speak. I can tell you over the last 3 years, we have 500 global investors that invest in our funds. Most of the that invest in our various funds. These are most of the governments and sovereign wealth funds and pension funds and superannuation funds of the world. So we have a good pulse on what the foreign investor community is thinking. India has gotten disproportionate amount of queries over the last 5 years. Every one of these 500, in some way, shape, or form, have showed up to India, looked at the market, asked us questions. And so I can see the interest levels picking up. A year ago, I would have said we're around the corner from 30-40% of them actually setting up shop here and coming into the country. The macro situation has changed, and I think that's putting some pressure on India and is probably making some people in the foreign investor community pause. I don't think the interest is gone. I think just oil prices being where they are, the rupee depreciation that's happened this year, some of the other macroeconomic sort of stresses that we see, some of the leverage problems that we have in the country are just making people wait a little bit more. So it's unfortunate. I think what happened was I used to say India's fantastic macro, terrible micro. And now it's kind of reversed. It's actually great micro, things are great on the ground, but macro things are challenging. So I think we're unfortunately plagued one way or another.
So yeah, it's like a pendulum with a full swing. What's your view on residential real estate? Do you think equity is going to come into residential space? I think there's a huge amount of debt burden. People are levered to the hilt. It clearly requires equity. Do you think they're going to see equity coming in soon?
So we've actually started growing our residential book. Out of our $7 billion we have invested in the country, about $450 million now is resi, which is small out of 7, but out of on its own, it's a big book. I'd say very selectively we're looking at residential, just a few cities, not much more, tier A developers, and helping the developers that probably have this high cost debt in their balance sheet recapitalize. I think that's our main advantage that we can play. But I think we're never going to be following the same strategy we do in office or roads where we do 100% deals. We try to be a residential developer ourselves. That's not our business.
So you're going to play the credit story only on residential?
Probably, yeah.
Probably, yeah. Two, three last questions. What about tier two cities in India? Are you ever going to get there?
I mean, never say never, but there is already so much for us still to do in the tier one cities that, we know these markets, we understand these markets, we may as well grow where we're comfortable. In infrastructure, we're already going through some of these rural areas, but in real estate at least, I think we'll stick to tier one cities for now.
In US, Brookfield focuses on warehousing, logistics, hospitality. Are you going to get into these sectors within the Indian real estate context?
So we continue to look at all of those sectors. I think for us, the big thing is scale. We want to invest in businesses that we can grow, 10, 20,000 crores of asset value. Office was clearly an area where you could grow a lot of scale. I'd say today industrial and warehousing is still being developed. So it's not quite that scale yet. At some point it will be, and I'm sure at some point we will do a transaction in that space. Hospitality is at that scale, I think, but just finding the right opportunities can be challenging because of the disconnect in the market. But otherwise, I wouldn't be surprised if over the next 5 years we're in all of these asset classes.
Oh, that's good news. Just two last questions. This one is going to put you on spot. Do you think investment markets will get affected if BJP government doesn't manage a clear win in 2019 elections? You can skip it if you don't like.
No, I mean,
but it's a genuine question. I think all of us are heading towards election year, and it's something that we're asking ourselves.
See, markets will always have short-term movements, and any disruption, we've seen last Friday with the commercial paper market, what that did to equity markets, that'll probably calm down as well. But any short-term movement will have a disruption on the equity market. So there's no doubt if there's a change of government, that will have some impact. But as I said, long-term, we're believers in India. We're believers in the India growth story. It's phenomenal what's happening in this country. I mean, I look at what Jio's done, getting 4G-enabled networks into every Indian's hand. What e-commerce will do to the logistics and the warehousing sectors. I mean, there's so much opportunity that we are confident of investing in India, irrespective of the government.
Really, last two questions. One I have told you, one I have not, because they asked me to ask for surprise. This is a rapid-fire question. Toronto or Mumbai?
Mumbai.
Real estate or solar?
Real estate.
Blackstone or GIC? Who worries you most?
Sorry, what?
Who worries you most?
They're both very different.
They're both. Mumbai, Bangalore?
Mumbai.
Residential office?
Office.
Trudeau or Modi?
Sorry?
Your Canadian president,
Trudeau or Modi? I've had the pleasure of meeting them both, and definitely Modi.
Modi. And on that happy note, just one question. This is off the cuff. You've done so much in India. You've achieved in the last 10 years. And you've achieved so much under 40. This is really personal. If you were not to do real estate and solar, what would you be doing now? What is the next job or next thing for you to do in India?
In India, the area that I see the most opportunity that we as a group don't invest in, but I believe is going to be the next real generation is really just accessing that last billion people, sub-Saharan Africa equivalent, and bringing them in with technology. So I think technology in this country, we've seen some of it already start to happen, but technology that reaches the masses and is tailored for the masses, which are very different profile from those that live in tier one cities, that's the area that I would be passionate about spending my time.
Technology.
Yeah.
Super. So that sort of brings us to an end. I really enjoyed the conversation. I don't think we get you very often on stage. So thank you again, NAREDCO, for inviting Anuj, and thank you for coming in.
Thank you, Shobhit.
Thank you very much. And with that note, we would like to end.
Thank you, gentlemen. Huge round of applause, ladies and gentlemen.
Thank you very much, guys.
Before you leave, sir, we have a special token of appreciation, but I think the feedback coming in from CNBC is, of course, they're so impressed with your interviewing skills. They would love you to come back on the channel and do a few interviews for them. Huge round of applause once again, ladies and gentlemen, for Mr. Shobhit Agarwal and of course, Mr. Anuj Ranjan. So all right, we'd like to present a small token of appreciation. Firstly, women empowerment all the way. We have the very beautiful Ms. Tara Subramaniam in the house. So ma'am, requesting you to please come up on stage. The MD and head and Dwello, JM Financial. Please put your hands together for Ms. Tara Subramaniam, ladies and gentlemen. She would be felicitating Mr. Anuj Ranjan with a lovely photograph. We'd like you to have a lovely photograph, ma'am, with I really think that was a fun and a candid interview. So fantastic. And before you